The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Greetings, everyone. Good afternoon. Welcome to another edition of Breakout Investing on TFNN. Ken Shreve with you, wrapping up another volatile week of trading in the stock market, but hey, looking to end things on a bright note here. Good to see. The number to use, toll free to get through if you want to talk to me about this market, 877-927-6648. If you can't listen to the show live, don't forget you can always get it as a podcast on iTunes. And you can also listen to all TFNN programming on your handheld device, your smartphone, Android device, iPhone, whatever you have. Just type in TFNN.mobi in your smartphone browser, and you can listen 24/7 that way as well. I'll be going over charts on the show as I always do, and if you want to look at those charts right along with me, just tune in to Tiger TV on the homepage of TFNN.com. The show is carried live on Channel 1, archived on Channel 13, and you can also listen to Tiger TV on your smartphone. You can watch Tiger TV on your smartphone as well. All right, let's take a look at volume first in the market. Right now, volume on the Nasdaq and New York Stock Exchange tracking about 10% lower than what we saw on Thursday. NYSE volume on Thursday was just over 815 million shares. On the Nasdaq, it was just a tad above average at 1.8 billion. So we're tracking a little bit lighter today. Still not bad, though, for a Friday. Volume not too bad in the market here. S&P 500, let me go ahead and refresh this chart. We'll see the benchmark index is holding on to a 2% gain here, up 28 points to 1365, trading up near its session high. Let's take a look at a weekly chart for the S&P 500 because it's probably too early to say, but things are getting interesting here. I mean, the S&P 500 is, on a weekly chart, is building the right side of a base here. You can see that trending above its 10-week moving average. Not out of the question at all that this index could, down the line, conceivably try to take out its highs earlier this year in April. So there's on a daily chart, you're seeing good action in the S&P 500. On the weekly chart, you're seeing a base that's being built as it approaches its April highs. Wouldn't be surprised to see maybe a little downward, little mild shakeout here, maybe a little softness in the S&P 500, which could eventually, pave the way for a real breakout. So we'll see, monitor that situation in coming weeks. Let's move over, take a look at the Nasdaq Composite. Nice gap up for the Composite today. It's outperforming, up 2.25%, just over 65 points to 29.75. We look at a weekly chart of the Nasdaq, and it's it's not in as good a shape as the S&P 500, but it is still building the right side of a base here. So you see it's further off its high than the S&P 500, but still nice base being built here for the Nasdaq Composite. And we'll check in on the Dow as well. See, the Dow is up 1.8%, 232 points today to 13,111. So strong day for the market. Listen, a lot of people taking a beating in recent weeks, recent months. Nice to see a lot of green out there. The risk-on trade, as they like to call it, certainly on. A lot of growth names, some market leaders, some damaged goods, some beaten down stocks rallying back today. But, the reason for the rally, of course, a jobs report earlier today that came in much better than expected. Non-farm payrolls in July increased 163,000. June Non-farm payrolls were revised lower a little bit to 64,000 from 80,000, and the May revision was higher to 87,000 from 77,000. Unemployment rate ticked a little bit higher to 8.3%, but that 163,000 print was just better than expected, and a big improvement from what we've seen in recent months. Still not great, but we'll take it. Goldman Sachs with a call today on the euro. Interesting call. Goldman's been making a lot of calls on the broad market. Let's check in on the FXE. This is the currency shares Euro Trust, basically trades in tandem with the euro. Goldman Sachs thinks there's a good trade here in the euro, looking for a price increase to about $1.30. Right now it's at 123.03. So strengthen the euro today, and the dollar is also weak. So here's that big break below the 50-day moving average that we were looking for in the UUP. UUP is a ETF, a liquid ETF that tracks basically the price of the U.S. dollar index. Big break below the 50-day moving average today. It is down almost 1.2% to 2265 last on the UUP. Again, comprised of a bunch of long U.S. dollar contracts. The U.S. dollar index itself also under some pressure here. 8237 down 99 ticks. Call it 1.2%. Let's check in. I have a chart of the U.S. dollar index here, but it's as of Thursday's close. But we'll see the U.S. dollar index 50-day moving average is at 82.67. Just mentioned that the dollar index today is at 82.37. So you do have a break below the 50-day moving average, a short-term support level for the U.S. dollar index. We'll see if that eventually translates into more good news for stocks next week and going forward. Crude oil today, a big move for crude oil, up 4.9% to $91.40 a barrel. A lot of oil and gas names on the move today. EOG Resources, a big gainer in the exploration and production group. Kind of a breakout here, but still deep inside a base. Shares of EOG Resources up 10% today to 105.77. We have Occidental Petroleum also up nicely in the group. Shares of Occidental Petroleum up 3.7% to 88.80. You can see a lot of these E&P firms are still deep inside of bases. So these stocks are not on my radar screen right now for my Ultimate Growth Stocks model portfolio. Really the type of growth stock I target has to be closer to a high. It doesn't have to be at a high, but usually within 10-15% of a 52-week high. Those are going to be the growth names on my radar. So these E&P firms making big moves today really don't have my they're on the screens of a lot of day traders out there, I know that, but they're not on my screens yet because they're still coming off lows. They still have a lot of overhead supply to work through as they work their way higher. But Pioneer Natural Resources also having a good day in the E&P group, up 5.9% to 97.45. And let's check in on Continental Resources here. This used to be a big leader, came under a ton of pressure when oil prices started to sell off, and Continental Resources moving off its lows today, up 5.6% to 66.08. Financials doing well today. We'll check in on the financial select sector spider. Got a little breakout here. So this is, it's interesting. The major average is acting pretty well. Yeah, we can complain about the volume, but again, for a Friday end of week volume, not too bad. XLF, a little bit of a breakout here over some near-term resistance. XLF up 2.8% today to 14.89. So compelling action in the XLF as well. Let's check in on the TLT here. This gives us a good read on the long bond. Bonds under a little bit of pressure today. The TLT is down 1.7% to 127.30, trying to hold its 50-day moving average here. You can see it's basically sitting right on the line. Check the yield on the, let's see here. I think it's TNX is going to be the 10-year yield right now at 1.57, 1.58% thereabouts, and the yield on the 30-year note, 30-year bond, I should say, right now at about 2.66%. So that's what's going on today. You know, listen, it's compelling. I've got obviously a rising tide lifts all boats. Have added another name to the Ultimate Growth Stocks model portfolio. I have been selectively nibbling in stocks, so I do have some long exposure out there. Got some good high quality growth names that are outperforming nicely today. So if you want to see what stocks I own here and you want to take a 30-day free trial of Ultimate Growth Stocks, 30 days free. Just go to the homepage of TFNN.com. You can click on newsletters on the homepage, then click on investment newsletters. You'll see me right on the homepage there in the carousel as well. Also, KenShreve.com takes you to my TFNN page where you click on the green banner. That's another easy way to get that 30 days free of Ultimate Growth Stocks. All right, let's take a look at some earnings reports today. We are winding down earnings season. I saw some data from Thomson Reuters. We're at the tail end of earnings season here. We've got a few more set to report over the next couple of weeks, but about 2/3 of companies have beaten earnings estimates. Let's take a look at shares of LinkedIn having a big day today. I mean, this is such a tough stock to handle. I've owned it off and on in the model portfolio, but it just seems to be sometimes a stock just has your number, and it really should be put on a do not trade list, because every time you buy it, it's just hard to make money in LinkedIn for some reason. But you can see it was under quite a bit of selling pressure headed into earnings last night, down for 3 sessions in a row. Tuesday, Wednesday, Thursday, precipitous decline for LinkedIn, but rebounding nicely today, up $14.74. That's a 15.8% gain for shares of LinkedIn. 108.25 is the last price for LinkedIn. Take a look at its weekly chart here, and we'll see a swing point here of 109.90. So interestingly enough, despite a 15-16% move for the stock, it has not broken out from its base yet. So breakout buyers, probably going to be interested in this name if it can move over 109.90 with conviction. Earnings report was outstanding at LinkedIn. I don't think that anybody was surprised to see the numbers that LinkedIn came out with. Their earnings were in line with expectations, 16 cents a share, up 45% from a year ago. Sales a little bit better than expected, up 89% to $228.2 million. I've said it before and I've said it again. A lot of IPOs, they come public with a lot of talk about growth and how bright business prospects are going to be a year, 2 years, 3 years down the line. Well, LinkedIn has been profitable for a while now, and it clearly is showing it's a company that can execute. The professional social networking site is used by not only professionals seeking jobs, but also by employers that are looking to hire. Company ended the quarter with 175 million members, up 9% sequentially from Q1 and above expectations. Also raised its full year outlook. So great numbers from LinkedIn, and the stock is benefiting accordingly. Up big today. Like I said, 16% gain today to 108.32. All right, folks, we'll be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
TGIF, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing, back from the first break, talking about great earnings report from LinkedIn. And, Zillow is another name that I've talked about on this show in recent weeks. They come out with earnings next week on Tuesday, as a matter of fact. And Zillow is another one of these new issues that really just has a great track record of execution. And right now, shares are up 6.3% to $38.62. Maybe investors understanding that we may see a good earnings report from Zillow next week. And I wouldn't be surprised. Now, Zillow has been under quite a bit of selling pressure. A lot of these, LinkedIn and Zillow and some of these net IPOs really have been falling along with Facebook, and I think some of them were unfairly beaten down. Zillow is not at a buy right now. It did reclaim its 50-day moving average today, but you've got pretty significant resistance in Zillow's chart at $44 a share. So it's possible we could see a breakout over $44 eventually. Be listening closely to what the company has to say next Tuesday when they report. But for the full year in 2012, Zillow earned their first profit in 2011. They earned 10 cents a share. That was last year. This year, they are expected to earn 28 cents a share. That would be up 180% from last year. And in 2013, earnings are expected to be at 62 62 cents a share from 28 cents in 2012. That would be up 121%. Zillow provides online real estate data, basically connects home buyers and sellers. Just like LinkedIn is, doing well with mobile, Facebook very challenged with mobile, but Zillow as well is seeing a lot of success in a mobile push. So interested to see what Zillow has to say on Tuesday. Stock is outperforming nicely today. A lot of other earnings reports today and several breakouts. I mean, this is compelling. A lot of people I know are not going to trust today. They're going to look at the volume, seeing that it's coming in below Thursday. But, again, you just have to kind of look at the action underneath the surface, and seeing a lot of heavy volume breakouts today. There have been, heavy volume breakouts in recent weeks as well. So, next week will be important. We'll just kind of see how the market trades. If we can decline in lighter volume, and basically we just don't want to see, a lot of institutional selling in the market. Higher volume declines, volatility. See if the market can behave itself next week. Hold on to some of the gains seen today. Maybe, Monday we decline in light volume. Maybe it's Tuesday, but let's just hope for some orderly trade here. How about shares of ResMed today? I mean, just a monster move for this stock, up 11.8%. It's a medical device maker trading at 35.60. Big gap up, breakout from deep inside a base. ResMed looking very, very strong here. Huge volume in ResMed as well. They sell medical devices that help treat sleep apnea, or basically impaired breathing during sleep. Very dangerous, but ResMed is kind of the leader in treating that sleeping disorder. I think I have a weekly chart for ResMed. Maybe not, actually. No, I don't think I saved a weekly for ResMed, but you can see a strong breakout over its prior high here in late April, early May at right around $35. So, this is a tough one. I remember, the folks over at Investors Business Daily, when I was learning to invest in growth stocks, saying it's not bad. You don't be afraid to buy a gap up in price, because usually buying demand is so strong it can actually be a decent entry point. So it's tough, though, when a stock is up close to 12%, big gap up. What you do have here, though, is a technical breakout, which is compelling for ResMed. Earnings were up 38% from a year ago to 58 cents a share. Sales were up 9% to $372 million. So big, strong day for ResMed. IT is another interesting company here. Mentioned it off and on in the past. Gartner Group. Gartner Group is a IT market research consulting firm to corporate clients. Stock is hit an intraday high today of 48.51. It's still up 5.6% to 47.02. Trying to break out from a base here, but looking pretty strong. The swing point is 46.69, so it's at 47.02 right now, trading slightly above that swing point, but volume strong in Gartner Group as well. Earnings were up 32% to 45 cents a share. Sales up 9% to $397.5 million. Before we head into break, we'll just swing over, take a look at a weekly chart for Gartner, and you can see here maybe a little cup with high handle pattern. Still could be in the early stages of a breakout here. So another heavy volume breakout. Gartner Group, ticker IT on the NYSE. Stick with me, folks. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back to Breakout Investing, everyone. 877-927-6648. Let's go to Garo in Orange County, California. Garo, good afternoon, sir.
Good afternoon to you, sir. Thank you for taking my call.
My pleasure, my pleasure.
EW, still I'm watching. You think it's or when is the right time to get in?
You know, Edwards Life Sciences, Garo, is a stock that I have been following. There are a lot of healthcare names, you know, acting well. You know, DVA, another one. But you know, what I like about Edwards Life Science is that you had a big, strong breakout for the stock, and what it's doing now is it's coming down to its 10-week moving average and finding support. So the breakout for Edwards Life Sciences was in mid-June, and then it rallied a little bit, started moving sideways, and it actually tried to break out last week. Now, I'm a little disappointed that it wasn't able to hold gains better, because as soon as it tried to break out last week, it started to selling pressure came into the stock. But what I like is that it is still firming up at its 10-week moving average here. 98.61 is the support level that you want to look at here. Right now, it's trading around $101 a share. So I like it here. I would, when a stock breaks out and finds support at the 10-week moving average, typically you like to see heavy volume. You don't have a lot of volume in there today, but it is making a good case it wants to firm up there. And, I would just put a stop just underneath that 10-week moving average, say around, 96, 97 bucks, something like that.
All right. Is that in your portfolio?
It is not. I don't own it yet. Okay. I don't own it yet. I've got seven names in there. I've got some healthcare exposure already. So this is a stock I've been watching, and it's got good fundamentals and good technicals. So there's a lot of stocks out there that fit that mold. I can't own all of them though.
Yes.
Yeah.
One last question. It takes a minute. Regarding that LNKD, I bought it after hours yesterday after the news came on. I bought it at $98 even. Should I let it go or should I keep it until Monday?
I think there's so much accumulation going on in this stock today, Garo. That was a good buy in after hours last night. I don't see any reason to sell it. I think this is a stock that more and more growth fund managers are eventually going to gravitate towards. And again, I think if this market can hold itself together, which I'm starting to think is a distinct possibility, I wouldn't be surprised to see LinkedIn eventually take out 110, and then that would bring 120 into play. So it's a strong stock. It was a great quarter. I don't see any reason to sell when it's under accumulation here.
All right. Should I put a stop loss at $95 in case if it drops down, I can make only $1, so I won't lose?
Yeah, I mean that's really up to you where you want to set the stop. I mean, I sometimes will cut a loss, sometimes 2%, 3%, 4% before below what I pay for a stock. So sometimes I'll cut a loss at 5%. So if you're in at 98, a stop at 95, that's taken a pretty tiny loss. And again, I just with the amount of buying going on in the stock today and the market looking pretty good here, it seems like a reasonable stock. It's kind of a personal preference, though,
Yes.
Yeah.
Thank you, sir. Thank you for taking my call. I appreciate it. Thank you.
Okay, Garo. Thanks. Have a good day.
You too.
All right, so Garo in LinkedIn after hours Thursday. That's that was an aggressive buy, but it worked out for him, and he wants to know where the stop would be. Technically, this stock's chart has improved dramatically after today's performance, and it certainly brings a breakout over 110 into play. So LinkedIn is looking very strong here. Let's also take a look at FEIC. This is another monster mover today. FEI company stock is up 11.5% today. This is the daily chart. You can see a monster move for the stock. Last price $52.07. FEI company is a supplier of scientific instruments for nanoscale applications found in a lot of different industries: materials, science, life sciences, semiconductors, data storage, natural resources, etc. But good earnings here. And I want to take a look at the weekly chart for FEI because this is, I don't have a weekly chart here either. Oh well. Rather than waste time on air here getting a weekly chart, we'll just stay on the daily here and see that despite a big price move, this has been the challenge in recent weeks. You see these earnings inspired big moves. Do you want to chase a stock that's up 10, 11, 12, 15%? It's that's a tough sell to a lot of people, but the bottom line is that this one is still within buying range here. It's not extended. It's just now over a swing point of around 50, 51.50, 52. And obviously the market responding pretty well to the company's earnings report. Now, technically strong, heavy volume breakout. The issue I have here is decelerating sales growth in recent quarters. FEI is going to be able to probably grow annual earnings by 15-20% over the next couple of years, but you do have sales growth decelerating in recent quarters, and that's one rule I follow. I'm not going to buy a stock when the rate of sales growth is slowing down. I don't care how bright growth prospects are. That's just a no-no in my book. But technically a very strong stock here, no doubt about it. CBS, we all know CBS Network. They also came out with strong earnings. Gap up for CBS today, up $1.93 to 5.8% to $34.97. I do have a weekly chart here for CBS, and we'll see that this is another stock here. This is a nice base forming, possibly still in the early stages of a move here. So if you're buying CBS up here, you're buying a technically strong stock, market responding well to earnings, and you're certainly not chasing because it looks like it could be in the early stages of a breakout. All right, a couple of big short squeezes today. Got to talk about Mercado Libre, big short position in this stock. How about Mercado Libre? Up 25.5% today. Good for a $16.95 gain, $83.47. Last price here. Still a broken stock. This is a stock that's not going to be, it's not on my buy list. It has just been, obliterated by heavy volume selling in recent months, but they host an online commerce and payments platform in Latin America. I think eBay in Latin America. Earnings were up 68% to 57 cents a share. Sales were up 28% to 88.8 million. Very, very good numbers, but like I said, a very, very big short position in Mercado Libre. So a lot of today's move, probably just the shorts covering. Just doesn't seem to me like a stock that gets hit this hard by selling basically since May. I don't know that fund managers are going to be building new positions in this stock when a lot had been selling in recent months. So it looks like just a big short squeeze today in Mercado Libre. Same thing with Opentable. Remember, Opentable used to be a big leading stock, growing earnings rapidly, online reservation system company. Opentable up 16.5% today to $39.77. Big short squeeze here as well. Earnings up 27% to 42 cents a share, I should say. Sales up 15% to 39.6 million. Another stock here that there's just too much technical damage done in recent months to think that it's ready to start a new uptrend here anytime soon. Take a look at shares of Boeing. They announced a couple of nice contract wins today. Boeing, disappointing performance for the stock today. I got to say it's up 1.1%, trading near its session low to 72.78. Boeing booked orders to sell 94 of its 737 aircraft to two Asian airlines in a deal worth $8.3 billion. So Boeing's price action has been squirrely, to say the least in recent weeks. Another stock here technically damaged, and good news like this, you'd think it would bring some buyers into the stock. Not the case. Boeing trading near its session low, still up 79 cents to 72.78, but well off its intraday high of 73.74. Fertilizer firm AGU. Let's take a look at Agrium. Agrium having a decent day today. They had earnings. Stock is up 1% to 95.12. A lot of fertilizer stocks acting well here. Earnings at, Agrium up 20%, $5.47 a share. Sales were up 10% to $6.8 billion. Very bullish comments from the CEO earlier today. He said the company expects high crop prices and tight grain inventories. Growers expected to expand acreage, use more fertilizer. So CEO very bullish on business prospects here. Agrium, big price move during the month of June, but still showing relative price strength in this market. And let's take a look at CF Industries too. Probably the institutional quality fertilizer stock out there. Earnings are due August 6th, and going to be interesting to see if CF Industries can clear the swing point here of 208.43. 208.43. That's going to be its intraday high if you're looking in Tiger TV. There's the swing point, and go ahead and take a look at a weekly chart for CF Industries, and you see a nice cup with handle pattern forming here. I'd call this a high handle here because when it hit that high of 208.43, it actually took out the prior high in the base. So sometimes, a stock can do that, and then it can drift lower, so it's forming a high handle area here. CF Industries could try to break out. Now, earnings are due August 6th. Do you want to buy ahead of earnings? I tend not to do that because I find it generally to be, a losing proposition. So just a high risk buying so close to earnings. But CF Industries definitely acting well. Kraft Foods, another nice mover today. Let's move on. Take a look at Kraft Foods. Big move for the stock today, up 4.2% to $40.57. Who knew that Kraft Foods was a Nasdaq 100 stock? I was sort of surprised to see that, but earnings were up 10% to 68 cents a share. Sales down 4% to $13.3 billion, but Kraft Foods, another one of these consumer staple stocks that doing well in this market. Elsewhere in the Nasdaq 100, a lot of beaten down merchandise making good moves here. Priceline up 2.6% today to 665.96. Priceline is going to be out with earnings next week on Tuesday. Earnings expected to be up 34% to $7.36 a share, with sales up 23% to $1.35 billion. So Europe is going to be the kind of focal point for Priceline's earnings, I suspect. We'll see what Priceline has to say next Tuesday, August 7th, after the close. This is another former leader, frankly, that looks a little vulnerable to me in my quest for kind of looking for emerging leadership here. Stocks still in the early stages of growth, stocks still in the early stages of potential upward price moves. Priceline is not going to be on that list. Doesn't mean it can't go higher after earnings, but in my opinion, there are better fish to fry out there. And I feel the same way with Intuitive Surgical. Despite a big move today, stock is up 3.2% to $493.01. Another Nasdaq 100 component. Still stuck underneath support here. Really been hammered, beaten down by institutional selling. This one does not have the look of a leader either. So Intuitive Surgical, I'm not interested in owning here. And a discussion of Nasdaq 100 gainers would not be complete without a discussion of Apple. Apple flirting with a breakout here. I think it's not a stretch to say that if Apple can really get going and bust out of this base, it is going to be good for tech stocks and the broad market overall. Apple trading in a tight range today, right in the middle of its range. It's up 1.2% to $615 a share. It's good for a $7.21 gain. The swing point here, pretty easy to see, $620. Volume is just still not seeing signs that funds are getting into Apple. It is arguably an over-owned stock. It does have plenty of institutional sponsorship, institutional ownership. The question is, are more funds going to come in here? Because heavy volume fund buying is what really fuels these breakouts. So Apple has shown in the past that it can break out in low volume. Still, it would be nice to see more signs of accumulation in Apple. And with the Nasdaq up better than 2%, Apple is lagging a little bit. Again, only up 1.2% today. All right, before we head into our next break, let's take a look at Procter & Gamble real quick. Another big mover today. Procter & Gamble breaking out over a swing point of 65.75. Remember, activist investor Bill Ackerman last month disclosed a position in Procter & Gamble. Decent earnings from this company as well. Little mini breakout for Procter & Gamble, again, over 65.75. All right, folks, headed into the final break. Stick with me. You're listening to Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kay Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations, including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close here. Good, solid day for the markets. Nasdaq Composite right now up 57.5 points, 2% to 2967. Nasdaq Composite still vying for a breakout here, still trading slightly underneath recent highs. The S&P 500 not in the same situation. S&P 500, broke out recently. It cleared cleared a new high today as well. So the S&P 500 up 1.8% to 1389. So Market, haven't looked at the Russell 2000. Let's check in on see how these small caps are doing. Russell 2000 small cap index outperforming today, but still lagging the broad market, of course. Russell 2000 up 2.6% to 788. Still a ways to go to get to its recent high of 820 or so. Still about 32 points underneath that. So, but all in all, a solid day for the market. Mentioned that Nasdaq volume right now tracking about 5% below what we saw on Thursday, even a little bit lighter on the New York Stock Exchange, down about 10% from what we saw yesterday. Some interesting stocks out there moving. Dick's Sporting Goods, take a look at shares of Dick's, up 3.3% today to $51.19. Nice little breakout for Dick's Sporting Goods. Take a look at its weekly chart here. And yet another stock here forming a base, could be in the early stages of breaking out of a base, specifically a cup with handle base with a swing point of 50.32 at 51.19. You know, again, not dealing with chasing an extended stock here. Still within buying range, and decent volume in Dick's as well today, although it is quieting down as the session progresses. No official earnings date for Dick's, but it should be in mid-August. Another breakout today, India-based bank here, Hdfc Bank. Good, solid breakout from a cup with handle base here, Hdfc Bank. Again, ticker HDB, up almost 5% today to 35.97. Swing point of $35 a share here. Good solid breakout as well, with a little bit of volume too. So, you know, when the market's trying to rally, indices making a case that they want to go higher. Maybe it's this jobs report that finally is going to, you know, lift us out of the doldrums here. Remains to be seen. You know, we'll have to just kind of listen, watch what the market's message is next week, and hopefully we'll see a lot of these breakouts hold up. Hopefully volatility will subside a little bit, but overall seeing some pretty good action out there. Nationstar Mortgage Holdings, a stock that I've been talking about recently, up 2% today to $24.14. This is a company that services residential mortgage loans in the U.S. Don't have any earnings data for Nationstar Mortgage Holdings, but they will report on August 14th, and we'll swing over, take a look at a weekly chart for Nationstar, and I like the look of this stock quite a bit, namely because of this nice bounce off the 10-week moving average here. It looks like it's finding support. So, you know, stock that looks very strong in this market as well. All right, coming up next week, very, very quiet. I just did my the week ahead video for the street, and very, very quiet in terms of economic data, but we do have some earnings reports that I mentioned. Monday, we'll be watching what CF Industries has to say. Tuesday, we've got Priceline, Vitamin Shop, Zillow, and Walt Disney. Wednesday, Monster Beverage. Thursday, Nordstrom and Randgold Resources. So earnings season definitely quieting down. Folks, I hope you have a great weekend. Thanks for tuning in this week. Always appreciate it. Be back Monday with another edition of Breakout Investing. Coming up next, the Tom O'Brien Show, 4 to 6. Take care.
Time is the